Howdy there, folks. Welcome into today's video. This is an interesting one. So we're talking about honest stock in this video here today. And we're talking about, is this the next like TTCF type situation, or is this going to be more like an ELF stock? And what we're going to go through here today is very in-depth in numbers. We're going to talk about board of directors. We're going to talk about management teams. We're going to talk about the numbers. I'm going to show you the margins. We're going to talk about margins for both these different companies, right? And are honest margins more on par to like a chef situation, or are they more on par to like an ELF situation? So we're going to go very in depth here. I'm just feeling very relaxed here tonight. So, I even got a glass of water with me. So if you want to grab a glass of water, this might be a little bit of a in-depth, long, nitty-gritty video, but I know these are the videos that a lot of people absolutely love out there, and something that definitely is one of the reasons I've had a lot of success in the past on YouTube was because I went super in depth with companies, and we really looked at this stuff on a very high level. So I appreciate everybody joining me, and if you enjoy a video like this where we really get nitty-gritty with a company, let me know in the comments section. I always appreciate any love out there. Also, just so you know, we do have our massive once-a-year sale going on right now. If you're watching this in the future, hello to the future. It's probably already over at that time, but if you are watching this like within a little bit after this video comes out, essentially our once-a-year sale is going on right now to join the Prep Stock Group. If you're interested in that will be pinned comment down there to get access to the private Discord chat, all my different course curriculums, everything like that, okay? Alrighty, so where we want to start out today's video is talking about, obviously, inflation, right? Because inflation is at, or at least in terms of recently, we've been dealing with inflation that's the highest in decades. Like you have to go all the way back to like 1980-ish to find, 40 years plus. You have to go back to find inflation the way it's been. So the reason I show this is because this is very important to understand. This has impacted consumers extremely negatively, and this has impacted companies extremely negatively, because all these companies have all of a sudden had to deal with raw material costs going up, transportation costs going up, all those sorts of things. And so for even a company like Honest, they're usually going to be a little slow to react compared to the big guys, because the big guys usually have such pricing power that as soon as they see a change, they make that change right away. As a smaller player in the market, you kind of have to wait for the big guys to make their move, and then you can make your move in terms of like increasing the price of your products and those sorts of things to offset the massive inflation you're going through. So I think that's just something to kind of keep in mind here. And smaller companies usually have some trouble kind of dealing with inflation versus bigger companies. And the good news is the rate of increase of inflation now is starting to come down, so that's the good news. But we're still currently at least at very high numbers. That can change a lot over the next 6-12 months. Okay. Now, if you look at something like, basically, if you want to transport product around the United States, so basically trucking prices. I mean, we went to the moon, like literally to the moon. This is over the past 10 years, and trucking rates are usually very normalized. And essentially, trucking rates went to ridiculous levels. Now, the good news is this is starting to come down, and come down quite substantially, as we can see over the past several months here, okay? We have a long way to fall still in regards to trucking rates from here to get anywhere close to the normalized range. But nonetheless, this hurts a company like Honest in a massive way. Like, think about Honest's main product, and we'll go through all the different Honest product categories and those sorts of things in this video. But if you think about Honest's like main products, their main business, it's selling big, huge boxes of diapers and baby wipes, right? Which take up a lot of space. And so if you need to transport that stuff around, like you're going to get hit in a pretty significant way. It's not like they're shipping AirPods around, right? Apple's got it good. They it hasn't affected them as bad because they could probably fit, how many iPhones in one of those diaper boxes, how many AirPods could fit in one of those diaper boxes, right? It's a lot, versus Honest has to take up this massive space just to send one box of diapers, right? So when you're talking about something like trucking going up in a substantial way, it's going to hurt your margins and profitability in a pretty substantial way, right? And we'll look at all the numbers. And even the biggest companies in the world have felt this. The most well-run retailer in the United States of America is Target. And even a company like Target has had their margins and their profitability completely erode because of what's happened in 2022, okay? If you look at their latest quarter, Target reported third quarter operating income margin rate came in at 3.9%. That's compared with almost double that, basically double the number, right? 7.8% in 2021. The gross margin came in at 24.7% compared to 28% in 2021. So you're looking at the most well-run retailer in the world, like a Target, and they've had their margins wrecked completely wrecked because of what happened with inflation in 2022. And their profitability has eroded massively, right? And this is for the most well-run retailer in the world, Target. Their GAAP earnings, right, came in at $1.54. That was down almost 50% year over year. Almost 50%. It's extraordinary. And so I show you that because it's very important to understand the challenges that a company like Honest is facing. And honestly, to be quite frank, the biggest challenges we've seen in decades. Now, to add insult to injury, the consumer's been in a very bad place. And when it comes to Honest, they sell a product that is like a higher dollar number, right? They're never going to be known. They're known for super high quality products, but not the cheapest products. So if the consumer's in a bad place, then naturally you're going to think like not everybody's going to go out and buy Honest products, right? And so that's just something to keep in mind there. The consumer's in a tough spot. Inflation's hit in a major, major way. And despite this, actually, I'm going to show you Honest's numbers, and we'll go through all the metrics and numbers in this video. And it's actually quite impressive how well they've done considering a very bad dynamic. And many times people think the only way you can get a really bad economy or a really rough economy is by lots of jobs being lost, right? No, you can get a devastating economy even with jobs. It's just called inflation, right? And it's basically just a massive tax on the consumer, and consumers just have less money to spend out there, right? And so it's just something to kind of keep in mind that have obviously negatively affected Honest, and honestly is negatively affected every single company out there this year. And that's why you see even the best of breed companies like a Target have profitability fall 50%. It's been extraordinary how bad an 8% CPI wrecks companies versus a 2%. It's like night and day. And you know, for almost everybody watching this video, I almost guarantee you, everybody watching this video, you've never seen inflation like this. I've never seen inflation like we had to go through in 2022. None of us have. Because in order to have seen this, you would have had to be investing back in like 1980. No one watching this video right now was investing back in 1980, okay? I can almost guarantee that. I've definitely had some people reach out to me over time, and people join the private stock group and stuff that have been investing for 20, 30 years. But you aren't investing 42 years ago, 45 years ago, okay? That's a whole different generation there that was investing back in those days, okay? So we've gotten to see that. Now let's talk a minute about Honest's business lines, because we got to understand this. See, the thing with Honest is they're not really like a one-trick pony like many companies. They actually have many different business lines that are all very successful and growing. So their main business line is diapers and wipes, and they sell pretty much the highest quality product you'll find out there. This is so I have 3 children, and so I'm very experienced with diapers and wipes nonetheless, right? And so the thing I'll say, and it's something my wife and actually I were talking about tonight, it's very interesting, is our newest born son, he hasn't had to deal with any rashes or anything like that. But for him, because since I own a lot of Honest stock, basically we've had him only in Honest diapers versus like the other ones were like Pampers and Loves and Huggies and those sorts of brands. And those ones, we always had to deal with rash problems. This one's like, you know, maybe it's just coincidence, but this one's Honest only for wipes and diapers. And we've had to deal with no issues there. So this business is massive for them, and it's growing in a substantial way, okay? Then they have their beauty business. Now, if you want to talk about the business I'm the most excited about, right? Like diapers, wipes, that's cool. Like no matter what, people need to buy diapers and wipes. And so it's nice to have that stability. But I tell you, the beauty business, and this is something I experienced with Elf, it is like one of the best business models in the world. Like literally one of the best business models in the world. The margins you can make on your products, the brand exposure, the like how much you can get an average customer to spend with you goes up immensely. So this is one of the best business models in the world, and Honest is tapping into that in a major, major way. And I still feel like it's very early days for Honest in here. And it's nice when you can have, who's considered like one of the most beautiful people in the world, right? Jessica Alba as one that's doing a ton of your advertising and things like that, right? That's pretty powerful that everybody like sees her and like, I know who that is, right? And so this business is still kind of a baby. You'll see the numbers, and it's growing nicely over time, and it's going to grow much bigger in the future. But I still look at this business as a baby. Like I'm still imagining a day when I could go into a Target store and see what I saw with Elf, right? Where Elf used to have like 3 to 6 feet of space, and now they got like 12, 15, 20 feet in a lot of these Target stores. That's where I think Honest is going over time. They also have their bath and body business, which is things like shower gels, shampoos, soaps, lotions, things like that. And then they have another business line, which is clothing, which is rapidly growing right now. And so their clothing business has huge potential, and that's kind of a baby business. They do have other businesses, the company does, but these are in my opinion, they're 4 core businesses that are like going to be what make or break Honest in future years and make it a pretty exciting opportunity. So all these I'm excited about, but this one's the business I'm most excited about over the next 5 years. Okay. Now, if we go ahead and we dive into their board of directors, they have one of the most impressive board of directors of any. I don't want to say, they have the most impressive board of directors for any small cap company in the world, bar none. The most impressive. I mean, when you look at their board of directors, and you look at these folks, and I mean, this is like a board of directors you would have at like a 10, 20, 30, $50 billion type company, okay? Bottom line, like when you can click on all their profiles if you went to Honest Investor Relations page and look at their board of directors, it's sick. Now, the board of directors is extremely important for a company because these are the folks that decide who are executives. And the executives obviously run the business, right? And so the board of directors at a company is extremely important. And one of the things I've neglected, in my opinion, over the past 12 to 18 months is board of directors of companies. And I'm like, I need to get back there because at the end of the day, who's going to make or break your investments? It's going to be board of directors and it's going to be executives of companies, bottom line, okay? And so they have just this incredibly impressive board of directors. And, I ask you this, okay? If Jessica Alba asked you to be on the board of directors, look me in my eyes and tell me you wouldn't do it. Of course you're going to do it, okay? It's freaking, Jessica Alba asks you to do something, you're going to do it. It doesn't matter who you are. You could be the CFO of Chipotle and you're like, what? I'm a board of directors of this company over here? Well, it's Jessica Alba, like, I can't say no to that. Come on, man. There's power, okay? There's different types of power in this world, okay? That's all I'll say about that. And she has a whole lot of power. And if she wants you on the board of directors of her company, you're going to be on the board of directors of that company. That's just a flat out truth, okay? Now, she also can get whoever she wants as basically executives. And she has built an incredible executive team over the years. Nick, who's the CEO of the company, he came over in March of 2017. So prior to Nick coming over, let me tell you this is important. Honest was going through a little bit of a tough time. They were using some sort of ingredient back like in 2015, 2016 that got them in trouble. And it actually hurt their brand substantially back in those years. And it took them years to build back their brand and to be known as like a better brand than like everybody else out there. So she realized like I need to pull in like a real deal Holyfield here. And she brought Nick over and he's done nothing but a phenomenal job running this company since he came over in 2018, 2019 and moving into future years. And I've watched him and I'm just very, very impressed. He came over, if you didn't know, he was executive vice president of Clorox Company. And he was also the chief operating officer of their household lifestyle and core global functions. So he was always, for a long, long time over there at Clorox doing a great job running their businesses for them. And he pulled over Rick, who's the chief revenue officer for the company. And he joined right around the same time Nick joined roughly. And he was used to be a vice president over at Clorox as well. So you got a serious, when I show you this, okay, you got to understand, like, once again, like, who's running your company? At the end of the day, like these are primetime players, okay? These are folks from the massive gargantuan company that is Clorox, right? And these were high-level executives that have come over to Honest, right? And you look at their board of directors and you start to realize, oh man, they got some serious talent at this company. And you're going to see this all start to play out. Now, their chief digital and strategy officer, Pete came over from Amazon, okay? So Pete has 18 years of digital strategy experience, including spearheading groundbreaking initiatives at both Amazon and Ring. As the former head of Amazon Key, Pete was responsible for restructuring and scaling the service to 50 million plus Amazon Prime customers, enabling secure deliveries inside Prime customers' homes. Prior to Amazon, Pete served as a vice president and general manager of Ring. So this is like the Ring camera, if you didn't know, leading the development, launch, and management of Ring's home security system, Ring Alarm, and previously held progressive roles within retail, okay? So you start going through this and it's like, my gosh, you look at the CFO, Kelly Kennedy. I mean, she has an incredibly impressive track record with an MBA from Harvard. Like, I'm telling you, like, this team's a real deal Holyfield. And obviously you got Jessica Alba. And so there's two reasons why we have, like, this company has such an amazing board of directors and executive team, despite being this little small company. One is, I think these folks all believe in the brand and that Honest can build into this massive multi-billion-dollar brand. And the second reason is Jessica Alba. Like I said, there's certain folks that, they're just that person that they can get whoever they want. And Jessica Alba is one of those people. Like, it doesn't matter who you are. Like, she asks you to come work. Like, you're coming to do work. Like, that's just the bottom line with that. And so that's the two reasons why I think and so when I invest in a company like this, it's not like some of these other companies, which I don't want to speak of, that have very questionable board of directors and very questionable management teams. This is a no joke smoke, okay? And that's the bottom line. And so whenever you're looking at a company, I think this is very important if you're thinking about where that company's going in the future, because the great management teams and great board of directors, they're going to lead the company to the promised land over time. They'll get through whatever short-term stuff they're going through and make it to that other side, right? Now, this becomes very apparent how on top of things a management team is when you listen to their conference call. Their latest conference call is a little less than 40 minutes, okay? If you listen to their latest conference call, I am telling you, it's one of the most impressive conference calls you will ever listen to in your life for any size company. The level of detail these folks go into, like within 40 minutes, you're going to feel like you've been an executive of the company for like 5 years now, because they're going to run you through every metric, every number. You're going to understand, okay, here's why they didn't have this deal here. Here's why this margin's over here. Here's why this number is over here. Here's why they're like, there's no like, I'm a little confused at that. After you get done listening to an Honest call, you know exactly where the company's headed. You know exactly where the company's going over the next 6 months, over the next year, over the next 3 months. It's very, very clear in what just happened in the last quarter. It becomes very apparent and very clear. And I can tell you, it's like night and day listening to an Honest conference call versus other small cap companies. And so Honest has gotten grouped in the short term to all the other companies out there that have, been these small cap stocks, right? But I can tell you, there's the biggest difference in the world when you look at their management team, their board of directors, and when you listen to a conference call, it's not even, you can't even compare these other guys and gals to basically what you listen to in this conference call. Like, I don't care how long you've been investing. When you listen to an Honest call, you will walk away extremely impressed. Like if somebody said, I needed to listen to a small cap company conference call, you need to listen to Honest, because I'm telling you that level of detail is ridiculous, okay? Now, in regards to our latest quarterly numbers, so they had record quarterly revenue of $85 million, which is impressive considering the environment, and they had a lot of things working against them in this quarter as well that we'll go through in just a moment, so their number actually could have been way higher than that. 2023 first half revenue outlook of 7 to 10% they're expecting for the first half, so that's, nice strong growth, I would call that, okay? Now, in regards to their businesses, so diapers and wipes grew 3%. That might not look like the most exciting thing, but when you dig a little deeper, and like I said, this management team is the best at giving details, you realize the number is way better than that, okay? Revenue from diapers and wipes, which is 65% of the total revenue for the company in the third quarter of 2022, increased 3% in the third quarter of 2022 compared to the third quarter of 2021. Growth was seen across all key retail customers, driven by larger size offerings, price increases, as well as initial shipments to support expansion into new distribution. Honest consumption outpaced category growth in diapers and wipes, increasing 6% versus overall category growth of 3%. Wipes were particularly strong, with growth in tracked channels more than double the overall category, driven by alternative use of wipes beyond diapering, okay? And so this is an absolutely massive dealio here. And the interesting part is even some customers brought down how much inventory they're keeping around of just all like diapers and wipes related products. And so they were able to grow despite that headwind, right? Which if you're thinking about moving forward, that's the best thing for Honest. At the end of the day, if customers keep their inventory levels really low, which I'm thinking like Target's keeping inventory really low, right? And trying to watch all those sorts of things. Like at the end of the day, do you want Honest to just ship a ton of product and then it just sits there and collects dust and then they have no sell through because Target has to sell through that for like 2, 3, 4, 5, 6 months? No. You'd rather like it be a normalized thing so you can really understand a high level, like instead of them reporting 30% growth and then 5% growth or 30% and negative 10% or something like that. Like let's just have steady growth, normalized growth over time. And so I look at that as actually a very positive long-term thing. Obviously, short-term, it hurts the numbers, but positive, it's a great thing, long-term, okay? Skin and personal care. Revenue from the skin and personal care was about 26% of total revenue. That decreased 13%. But why did that happen? Okay? Compared to the third quarter of 2021. Revenue was negatively impacted by 25 percentage points, meaning if it was not for this thing, the revenue for this category would have actually grown 12%. Okay? So, due to a prior skin personal care rotation program with a key club retailer that did not repeat this year. So, I'm guessing last year in the same quarter, they must have had some sort of deal with, I'm thinking probably Costco, because Costco and Honest have always had a pretty close relationship. And it looks like that deal didn't repeat this year. You know, when it comes to these club retailers and certain products like that, like you know, one year they'll do a big order, next year they don't do a big order, so I don't really trip off that too bad. Like, that is what it is. You know, Costco likes to switch out products all the time and try something new. That way it keeps you as a consumer, like, interested. Like, Costco always has to have, like, their base necessity items, right? And so, like, a 30-pack of Coca-Cola or whatever that is, right? And so they always need to have a certain amount of their, like, you're always going to expect that thing. But what Costco loves to do is have these random, like, displays in Costco that you never went in there to buy this thing, but you go by this display and you're like, oh, that's interesting, I'm going to buy this, right? And I know if anybody else shops at Costco out there, you've probably experienced this, where you went into Costco thinking you were going to spend $60 and get a few things, and next thing you know, you're spending $160 on a bunch of random stuff, right? I've been there. I think we've all been there if you're a Costco customer, right? That's just the way it is. And so this is a very interesting dynamic and situation here, where it's just like this business is actually growing nicely when you dig a little deeper into it, essentially. Overall revenue in the third quarter of 2022 was supported by innovation in our beauty business with the launch of Fresh Flex Concealer and Extreme Volume Mascara and the launch of baby personal care products with new retail customer. Growth in the category was balanced following price increases in the first half of 2022 as sales and volume grew across both skin and personal care. As far as our household and wellness division, that was about 9% of revenue, and their revenue increased 115%, basically year over year, so which is an insane number. And this is mainly because of the new Honest baby clothing, and that's a big opportunity that I never even really thought about in this company until I saw this most recent numbers, and I was like, oh my gosh, 115%. Oh, maybe this has a chance to be something. And management team on their conference call said this could be about, a $15 million business here this year or so, and growing quite rapidly in future years. So the Honest clothing business, I mean, it's hard for me to even project what numbers are going to be there. I got to see a few more quarters, because I don't want to project like this business is going to keep growing 115%. Obviously, it will slow down, right? But I'm trying to figure out, is this going to be like a $50 million business a year, a $100 million business a year, a $200 million business a year? Because that can shift entire like valuation models and exactly like, what you're expecting the company's revenues and net income to be over time, right? So I need to see a few more quarters from this Honest clothing business to really be able to understand in what I kind of expect moving forward there, okay? So nonetheless, what you find when you go a little more nitty gritty is everything is actually way better than expected at Honest right now, okay? Now, in terms of their business, they have something very interesting that almost no one else has. In terms of where their revenue comes from, 40% comes from digital, 60% from retail. So think of this as like online, app related, whatever. And that's incredible, because I can tell you most companies that Honest competes with don't have 40% of their business coming from digital. They might be lucky to have 20%, and then 80% is coming from retail, or maybe even 90% is coming from retail. So I love this. I love how focused a company is, and not just on retail, but digital as well, and having control over their customers and those sorts of things. I think it's absolutely brilliant, okay? Now, in terms of gross margins for Honest, this gets very interesting. Gross margins came at 30.3%. That was actually, amazingly enough, a 30 basis point sequential improvement versus the prior quarter, the second quarter of 2022. Now that's extraordinary, because I can tell you almost every company I track, their margins got worse last quarter. In most companies, substantially worse, because of obviously all the inflation pressures, and it continued to hit throughout that 3-month period. And so the fact that Honest actually got margins in a better place is a miracle of life. That goes to show you how legit this management team is, that they could somehow have had a small sequential improvement in margins. Because like I said, almost every other company I track, their margins got worse. And a lot of companies substantially worse. So the fact that Honest got a little better on a sequential basis is, like I said, that's insane. Okay. Now, gross margin declined 570 basis points versus third quarter 2021, driven by higher product costs, including inbound freight, transportation, fulfillment, warehouse expenses, and increased trade promotion spend, partially offset by the benefit of price increases and cost savings. Honest, this is very important for everybody watching this. Honest also announced they got a big price increase coming in December for what they said is about 25% of their product. So, nonetheless, that will hit. That's going to help increase margins. At the same time, I'm looking at costs for the business flatlining or in some situations going down. So naturally, things are lining up for it to be a very good 2023 in terms of not just seeing revenue increase for this company, but actually seeing substantial margin increase in 2023 for the company and profitability and cash flow improvements. So you're going to likely get at least a trifecta, if not a fourfecta, we'll call it that. Okay. What's a fourfecta called? Okay. They also ended the quarter with $41 million in cash and cash equivalents. And remember, this company trades at a market cap less than $300 million right now. So that's a substantial amount of money, like $41 million. The majority of our cash and investments this quarter reflect an increase in inventory to support our strategic expansion plans, including retail distribution into over 2,500 Walmart stores. Yeah, that's something I didn't really cover here. They just got in Walmart stores. So imagine how big of a long-term opportunity that is for Honest over not just like the next year, but over the next 5 years, 10 years. It's incredible in just the brand presence. And even whether people buy the product or not, the first time they see it, just the fact that they see that brand and start resonating with it and getting used to it, right? As well as purchase our inventory supporting the Honest baby clothing business. We believe the company's increased investment in working capital is sufficient to support future growth of our business. Meaning, essentially, the company doesn't need to raise any money. Like, they don't need to dilute shareholder value or anything like that. And there's a lot of small cap companies, obviously, we know, that are going to have to dilute shareholder value and are going to have to take out big debt or do big capital raises. Honest does not fit that criteria. And so that's just another reason why, it's so wrong that they've gotten grouped into all the other stocks, the troubled children. It's like all the other troubled children are there, and then Honest is like doing its own thing over here, and they get dragged into that whole mess. Now, something I want to come back to is that margin there, because this is important. So these margins, in terms of some of these other companies that are reporting, like there's other small cap companies out there that are reporting margins of like 0%, 3%. 5%, 8%. So, a company like Honest coming at 30+% gross margin, very impressive. It's not up to an elf on the shelf, which we'll talk about in a moment, but it is still impressive nonetheless in this tough of an environment. Now, Honest products also launched at Walmart.com in the second quarter, followed by a national in-store expansion at Walmart of diapers and wipes and some personal care products in over 2,500 stores. They launched Ultra distribution in over 600 locations in the United States. Yeah, if they want to become a major player in the beauty category, skincare category, at the end of the day, cosmetics category, you got to be an Ulta. Like, just bottom line, you got to be a big player there. They also launched supplements and other personal care items online and in-store in GNC in the third quarter. That's like, I didn't even cover that business line. I'm not expecting much from that. We'll see what happens there. It is actually a very, in terms of selling supplements, it's actually one of the most profitable businesses you can be in. They also launched the Honest brand international with Superordinary, a leading distribution partner in the Asian beauty market, available on Tmall starting in the third quarter. Interesting. That's a big opportunity. Once again, we didn't even touch on really like international opportunity because that's something that's big for Honest over the coming years. They're expanding distribution with new and existing strategic partners, including Publix, BJ's, and Shoppers Drug Mart in the second half of 2022. So, obviously expansion, good. And I always think about these things in terms of, it's cool to sell in that first order, right? To Walmart or whoever, but it's really about that like long term of selling in over the next 10 years. Like that's really what I think about in regards to just getting in these names, is not like the short term pop and we got our initial order. It's like It's like how much revenue that means for you over the next 10, 15 years. It can be hundreds of millions of dollars or even billions of dollars in some cases, right? No, in terms of their revenue guidance for the remainder of this year, they basically had a range of $310 million to $315 million. And that includes even a key digital customer reducing weeks of supply. And the reason, and that might be Amazon that did that, and basically all these retailers, Amazon, Walmart, Target, they're trying to lean up inventory extremely lean. I mean, as lean as possible, essentially, going into 2023. And so, like I said, it's a short-term hit for a company like Honest because then you have, not as big of orders going in there, right? But at the end of the day, it's the best thing for long-term because then, whatever numbers consistently are hit from Honest, you're going to have predictability there. You're going to have accountability there, and you're going to have, belief that these numbers are going to continue to be hit because it's not like some mass order and then nothing for like 6 months, and then a massive order and then nothing for 6 months. I'd rather be like a continuous cycle of normal amounts, right? As far as adjusted EBITDA, their outlook remains within a range of negative 10 million to negative 20 million, closer to the higher end of the range, which I appreciate them just being honest about that, reflecting positive EBITDA in the fourth quarter, which is interesting, right? Positive EBITDA in the fourth quarter. In terms of positive EBITDA, in terms of any sort of positive cash flows or profitability for this company, I haven't really expected that till 2023, especially given all the inflation problems that we've had to deal with in 2022 out of nowhere. But, there's definitely a huge step in the right direction when it comes to this company. And once again, they're so much further away from a lot of these other small cap companies. When you start talking about they're already expecting positive adjusted EBITDA in the fourth quarter, like a lot of these other companies, they're so far away from that, they can't even think about that right now, okay? Now, are they an ELF? They might be, but they also might not be, okay? Here's the important thing to understand about ELF. ELF is... So you see net sales, this is their last quarter, the net sales increased 33%, right? Honest isn't putting up those sort of numbers, but also do keep in mind, I think this is very important. When they first started investing in ELF, their revenue was like dead. I had a belief that ELF's revenue was going to get a lot better based upon the CEO and the way I started to see him run the business, and based upon a lot of the influencer partnerships they were making, and based upon their packaging, their branding. I had a belief that ELF was going to actually start to increase revenues quite dramatically. And Walmart kind of thought the company was kind of like done, like it was kind of on its way out, right? And so Honest can get to those sorts of numbers, but they're going to have to reach a point of no return in regards to the business model where they become such a big brand that it's just pouring in new customers. So I'm never expecting Honest to report a 33% growth number. I'll just be honest about that, okay? 10% type growth, 15% type growth, that's fine. If they ever do a 33%, I'm all for it, but I don't see that. And so I think that's something that needs to be said. Gross margins also at ELF are like 65% now at this point in time, which is ridiculous. That's one of the highest gross margin businesses you'll find out there of somebody selling actual physical products. Insanity, okay? And so obviously with Honest, I can see Honest getting their gross margins to the 35% to 40% range within the next 24 months. But obviously there's a big difference between a gross margin of 35 to 40% and a gross margin of 65%. This is just insanity, okay? But what I'm watching with ELF play out is they might be on the break of becoming a cosmetics giant, which Honest can't even think about becoming a cosmetics giant right now. They're not even close to that stage yet. ELF's actually starting to reach numbers, and I'm starting to look at some of their revenue numbers, and I'm like, they might actually become a cosmetics giant over the next 5-10 years, just to be quite frank. And that's just a whole different levels of valuations and growth when it comes to all that, okay? And so, when it comes to ELF, the important thing to remember is that took time to play out. ELF didn't just go up in a straight line. It took a while to play out. And in regards to all my ELF shares I bought, back in the day, right, is, I was buying a lot of those shares. It was like either late 2018 or very, very early 2019. And so, it was great. I got incredible gains on that, but it took a while for that story to play out, right? We're almost in 2023 now. And so Honest, I look as a similar kind of situation of it's going to take a while to play out in terms of the massive gains. And they just need to do a good job executing the business over the coming years. The inflation headwinds look like they're starting to really die down in a substantial way. That's good for Honest. They're also got big price increases coming. That's good for Honest. And they're expanding business. They're expanding products into more and more stores. Their sell-through and their consumption is very, very strong. Their gross margins have held decent even in the worst possible scenario you could imagine for a company like Honest, where inflation goes to the highest levels in 40 plus years, and they've still kept gross margins over 30%. So I look at all that, and I look at the management team, I look at the board of directors, and I say, this is the most disrespected, probably small cap stock in the world, to be quite frank. And it's a shame, but it's what happens in this market. And so you're going to have, and I speak about this, you're going to have the winners and losers, right? And you're going to have these management teams that just show over the next year or two that these are the numbers we're putting up, and like we're here, we're the real deal Holyfield. And you'll have others that obviously fall, right? But when I look at them, I'm like, they're pretty impressive. That's all I'll say about that, okay? And when it comes to market capitalization, it's trading at $253 million. That's less than their entire revenue, which companies that they compete with trade at price to sales ratios of 3 to 5 range. And ultimately, over time, I think Honest is going to trade at a 3 to 5 price to sales ratio, just like all their other competitors do. And so if they do that, like, you can run the numbers on if you're expecting this company to trade at, let's say, let's say they have revenue of $400 million and they trade at a price to sales of 3 to 5. Like, run the numbers on that, and you're going to start to figure that out, right? What if they get to $500 million? And these aren't even crazy numbers at all. If we're talking about $2 billion or $3 billion of revenue, that's now we're going big there, right? But in terms of like $400 million, $500 million, $600 million of revenue, that's not crazy numbers, even remotely, to be honest. So nonetheless, I think there's a massive difference between this company and a lot of the other small caps out there, including the Chef and many others, in terms of the way they run their business, in terms of the professionalism they have, in terms of everything, and including the numbers. And so, Nick, even at the end of the conference call, it was a great ending to the conference call Nick had. He went over the 3 main key points on why 2023 is going to be a great year for Honest. And just as an Honest shareholder, I appreciate that. Those levels of detail give me confidence in the company. And then when I hear management team reiterate and run through why 2023 is going to be a great year for the company, it's exciting. Very, very exciting. And obviously, I'm a long-term investor, so I'm thinking way past 2023. But I would love if this is a stock I could hold for many, many years. I would love to be still in the stock in 5 years from now, 10 years from now. I would love it to just be an easy play for me, that they become just a cash flow machine. And despite the economy being good, bad, anything, they're just a consistent growing company that just throws off cash flow. And that's where I think this company's going. And based upon kind of the numbers and the data and everything I look at, and the management team and the board of directors, I think they have a real chance to pull it off. I'll just be honest. So no pun intended there. So anyways, I went super in depth on this beast. I hope you guys enjoyed that video here today. This is a lot what I'm going to try to get back to over the next year or so, and just trying to get back into the nitty gritty of these companies and really diving into them and showing you guys everything I'm looking at. So I hope you enjoyed it. I hope you appreciate it. I appreciate you joining me, being subscribed to the channel. Also, just so you know, we got our once a year sale coming up for the private. Actually, no, it's not coming up. It's literally going on right now, and it's going to be ending soon. So if you want access to the private Discord chat, the course curriculums, everything like that, that will be pinned comment down there. And if you're watching this way in the future, that deal's long gone. But don't worry, we'll have it again next year, November 2023. We always do it once a year around this time of year. Much love and have a great day.